We have the month of November in the books, and we are entering the last month of 2024. It is Tuesday, December 3rd, and this is your regular segment of Markets with Megan. We're coming to you today to just give you a recap of what we saw from an economic and an asset class perspective in the month of November. The biggest news was the presidential election. President Trump won the White House. Republicans won the House and the Senate. But the biggest news out of that, and I think why the markets really cheered after that, was the fact that there was no major uncertainty there. That we had come into the election with about a 50-50 chance between Vice President Harris and former President Trump. And what the investors were concerned about was that we wouldn't get the results on the first night. But we did get results. Shortly thereafter, we got the results of the House and Senate. So that uncertainty was cleared out of the market. That's why we saw some of the equity markets rally. Now let's dig into what we saw just from an economic perspective in the month of November. First of all, inflation, which has been one of our biggest concerns. Inflation continues to be stubborn. We saw on a year-over-year basis, not only on the consumer front, but also on the Fed's preferred measure, PCE core, both increased over the year-over-year basis more than the prior month. So inflation is stalling here, the progress we've seen. It's primarily still in that services, housing sector that we're seeing in inflation. The Fed, they continue to cut interest rates, though. They cut them by 25 basis points. This was very much expected. They did come in with their minutes from their meeting, though, and they made some comments about how the future of rate cuts, if there are future rate cuts, is that they will be gradual moves in the future. So this reduced a lot of the investors expecting aggressive rate hikes over the next year. From the consumer front, we saw confidence not only from the University of Michigan, but also from the Confidence Board. Both of these rise, and that's after the election. Again, no election uncertainty. So we did see confidence improve. However, we started to see that weakening in consumer spending that we've been concerned about. When you look at the control number, and when I say the control number, that is retail spending, excluding food, gas, autos, and building materials. All these things that can be volatile items, when you exclude all of them, retail sales actually declined for the month. So we're starting to see consumers get a bit stretched here with record high credit card debt and delinquencies rising. Now let's dig into the asset classes. The MSCI All Country World, which is your global index on equities, it rose for the sixth out of the past 7 months. It was primarily led by the U.S., and when we dig apart the U.S., we started to see some of these returns broaden out. We saw small caps, mid caps, both started to rise in conjunction with the large cap market. We actually saw the Russell 2000 post its best monthly return that we've seen this year. In the large cap space, we started to see from a sector level that broaden out outside of just technology. We saw financials, consumer discretionary stocks. These stocks rallied in the month of November. And when you look at fixed income, it was a really volatile month. For quite some time during the month, yields rose, which meant prices declined. However, when we ended the month, we did see yields come back down. They rose in about the middle of the month on the concern around inflation. They came back down when we started to get some mixed economic data and some uncertainty around the economic outlook. So basically, bonds ended the month relatively flat. The gains, though, when you look, were really primarily led by credit. When you look at investment grade, municipals, and high yield, and even emerging market bonds, they did better for the month. Commodities also, they finished the month slightly higher, though. What the biggest news out of commodities was that gold started to decline. We've had gold have a tremendous year this year, but because the dollar rose, there's optimism around growth with a Trump presidency, less regulation. We started to see gold prices decline this month, and that's been a rarity that we've seen this year. Now, that's just a recap of the past month. There's a lot of data this week. We've already got ISM manufacturing. We got the JOLTS report today, which came out better than expected. We've got a jobs report later this week. So we'll be back with several more economic pieces of data. And this is really one of the last weeks that the Fed will get an indication on what they can do in December. Remember, they have a meeting and that they are is still expected to cut interest rates by 25 basis points. However, it'll be very dependent upon what happens with the labor market this week and then any other inflation data that we get before their meeting. That's all we have today. If you like this podcast, please subscribe, send to friends, family, colleagues, hit that alarm bell. And if you'd like a history of our podcast, please go to marketswithmegan.fm. Thank you.